Hello and welcome to today's review of the True Potential portfolios. My name is Chris Leyland and I'm going to spend the next few minutes talking about our flagship investment product, and that is the True Potential portfolio range. Okay, so firstly let's start by discussing the performance of the portfolios. What we'll then do is we'll look at what are the key themes we're seeing from our fund manager partners, and finally we'll discuss what changes have been made to the portfolios over the month. Okay, so let's look back at the month of May. The portfolios have performed very well, with investors rewarded for taking risk, leading to a positive outcome for all 10 portfolios. Looking further out, performance numbers are excellent, with returns strong in all risk categories and with over a 30% return seen for the aggressive portfolio. Okay, so let's look more in depth at the underlying funds that make up our portfolios, and strong performance has been seen again from both Threadneedle and Close Brothers. For Threadneedle, their positions in healthcare and IT were the main contributors to return for May, with Electrocomponents, AstraZeneca and GlaxoSmithKline helping to drive return. For Close Brothers, IT and financials perform well, with their holdings in Atos, Alphabet, Admiral Insurance and Deutsche Börse adding to performance. In market conditions in May, the True Potential fund ranges that stock pick have shown the best returns. Okay, so let's move on, and as you'll know, we speak to our fund manager partners at least monthly. We're looking for any short-term key themes, and then we can tilt our portfolios to take advantage of them. Our managers, in general, were constructive on risk assets, particularly European equities, with positivity on Europe seen from virtually all of our manager partners, with political risk abating. Although valuations are no longer at low levels on a PE basis compared to long-term history, the feeling is that companies' earnings figures will continue to grow. Surprise on the upside, and that swelling corporate profits will support share prices and underpin valuations. The next key theme is interest rates, with, in the UK, Mark Carney's comments that interest rates will not rise until 2019, before Brexit negotiations, and that comment resonates very strongly with our manager partners. This illustrates that to gain a decent return, investors must be willing to take some risk. Okay, so now let's move on and take a look at what trading has taken place over the month. Rebalances have been placed for the balanced and growth portfolio. Within the balanced portfolio, the True Potential 7IM Balanced Fund has been reduced and the proceeds placed into the True Potential Goldman Sachs Income Builder Fund. With sterling at historically low levels, the True Potential Income Builder Fund is fully hedged, which is advantageous should we see sterling strengthen. Offering support to this decision is that Goldman's have proven themselves as good stock pickers. The differentiation between the two managers is that the 7IM funds are not fully hedged and are classified as active passive managers, whereas Goldman's selects securities based on a fundamental assessment of attractiveness, ability to produce income and to deliver capital appreciation. As we evolve deeper into the current market cycle, there is an opportunity to benefit from selective stock picking rather than being wholly reliant on market prices rising in aggregate. Within the growth portfolio, the True Potential 7IM Growth Fund has been reduced, and that's for the same reasons that I talked about earlier. The switch, however, has been increasing the True Potential Close Brothers Growth Fund, allowing us to access Close Brothers stock picking expertise and their ability to navigate valuation risk. Close have a 50% hedge on their overseas equities and therefore, similarly to Goldman's, are well positioned for any movement in sterling. Finally, the reduction of 7IM in both the growth and the balanced portfolios brings their positioning more aligned with the rest of the True Potential portfolio range. So let's look at the rest of the True Potential portfolio range, and allocations have been kept the same, with the optimization of the factors continuing to be paramount within the portfolios. As we are filming this right now, the UK election vote result has come in and we now have a hung parliament. This will make many investors nervous. However, we live in an uncertain world. Diversifying your investments is a proven way to reduce risk. If we look backwards, the portfolios have weathered various political and geopolitical events and are designed to provide clients with a good outcome, whatever is happening politically within the world. Here at True Potential, we take diversification to a new, higher level. not solely relying on a single fund manager to take asset allocation decisions. Instead, we use a range of managers, all with differing investment styles, what we call advanced diversification, helping clients to receive the outcome they desire. Thank you very much.